Good afternoon and welcome to the AFENTRA PLC investor presentation. Throughout the recorded presentation, investors will be in listen-only mode. Questions are encouraged and they can be submitted at any time just by using the Q&A tab that's situated on the top right corner of your screen. Simply type in your questions and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company can review the questions submitted today and publish responses where it's appropriate to do so. Before we begin, I'd like to submit the following poll. I'd now like to hand you over to CEO Paul McDade. Good afternoon to you, sir.
Thank you. Welcome everyone, and thank you for joining us this afternoon to hear our thoughts on the onshore Kwanza Basin in Angola and why we are so excited about the potential of the licenses we secured earlier in the year and the most recent license that we've been discussing, CON4. For a start, I'll introduce the AFENTRA team that's here with me in the room. Ian Clark, AFENTRA COO, will be leading this afternoon's presentation. Christine Woodcliffe, AFENTRA Head of IR, who's with us, who put together this afternoon's session, and Antonio Fernandez, AFENTRA Head of M&A and Commercial, who was involved in negotiating the entry into all of our onshore blocks. Before I pass over to Ian to lead this afternoon's presentation, let me give you a few of my perspectives on the onshore Kwanza. When we were approached by ANPG, who's the Angolan regulator for the oil and gas, to get involved in the 2023 license round, our initial thoughts were we're a P&D company, really that's our focus area, and it was a little bit early for us to start to get involved in exploration at that time. However, given the regulator had asked us, invited us to look at the area, we decided it was courteous and appropriate to at least go and have a look at the onshore Kwanza. As we started to study the area in more detail, the work that we did made us realise a couple of things. The very significant potential of the basin, both from an exploration and a potential redevelopment of existing oil fields. Again, the ability for us to have an early mover advantage, as we did in our entry into Block 305. And also, it was clear that ANPG were keen for us to bring our experience, particularly from our previous involvement on the large discoveries in Uganda and Kenya onshore, bring that experience to this basin and the operation of this basin and the exploration and potential redevelopment of some of the existing fields in that basin. And we realised that would help us in any discussion and application for any of the licenses that were of interest to us. Over a period of time, we identified a number of areas to pursue. From an exploration perspective, that was CON 15 and 19. However, the block we announced on Monday, yesterday, was actually the block that I think most people in Angola were pursuing, block CON 4. And that's due to the significant redevelopment opportunity as well as the exploration potential. So to be able to announce on Monday that we were not only have an agreement on entry into CON 4, but have been appointed to operate this license, both demonstrates a reputation and continued good relations that we have in Angola. It's also very important for the future growth of the company and the overall value of our business as we move forward. So with that, let me hand over to Ian, who will explain in detail why we're so excited about the Kwanza onshore.
Okay, thank you very much, Paul, and good afternoon, everybody, and thank you for joining. So a little bit of background on the Kwanza onshore, and then I'll take you into some of the detail on the blocks. So historically, Kwanza onshore was once Angola's production heartland. So back in the 1950s, when production commenced here, with some of the discoveries here, Benfica, etc., and over 15,000 barrels a day was produced into the 60s and 70s, but was abandoned due to unrest and the shift offshore into assets like Block 305 that we're in with Sonangol's operator. Importantly, the basin's got a proven petroleum system. We've got over 400 million barrels of oil in place, And since the early production in this basin, about 90 million barrels was produced until 1998 when it was abandoned. So when you look at it, though, it hasn't seen new technology or exploration since the 1980s. I think the last exploration was in 78. There's substantial potential, untapped potential across the fields, and we have had a number of wells, 150 wells ready for modern re-evaluation and redevelopment. Importantly, from a perspective of Angola, there's the favourable investment environment, active licensing that you've seen from AMPG over the last number of years. AMPG is very supportive from a policy perspective, and as we look at the onshore, there's good infrastructure that sets the stage for fast-track value creation. So when we look at this, we look at this as one of the classic overlooked opportunity, where our experienced and a phased approach could rapidly unlock both legacy redevelopment and exploration upside. So first, if we step back, just look at a bit of a regional comparison. The slide titled Kwanza Onshore Regional Comparison compares it to some of the nearby onshore basins. So in the top, Gabon Basin, that has about 3.5 billion barrels that's been discovered and produced, and the lower Congo, literally next door to Angola, which has had about 2 billion and 350 million barrels produced there. It's they all have similar geological potential. If you look at the number of wells that have been drilled, 600 wells drilled in onshore Gabon, 350 wells drilled in the lower Congo, only about 130 wells drilled in onshore Kwanza, of which very, very few have gone through to the pre-salt. So you can look at the creaming curve there. We've got orange, which is for the Kwanza. The lower Congo is in blue, and then greenish is the Gabon Basin. And what you'll see is that from about the 1970s, the Kwanza Basin was essentially flat. And that was due to the period of unrest, the political uncertainty and the inactivity. And by the time that probably people did return to it, the offshore had really developed with Block 1, Block 0, Block 2 and Block 3. So we see a lot of potential here. Other basins up and down the margin have delivered quite significant hydrocarbons, and the Kwanza could follow with the right investment and modern exploration. So this is an early stage entry, could potentially be a high growth basin, and uniquely positioned to catch up as the analogues mature. We've got deep experience from experience across East and West Africa, which we can apply, and one of the examples of that is actually the EFTG, which we were one of the cornerstone investors, which has been in the process of acquisition. So if we move on to CON4 and the commercialisation of existing fields. So CON4 was one of the last fields to be discovered. It was discovered in 1968. Holds a significant oil in place of over 200 million barrels, but only a fraction has been recovered, about 46. We think there's quite a lot of upside here from overlooked legacy fields. The field peaked at over 12,000 barrels a day, and it shows that the basin's delivered, or some of the field's proven deliverability. So as we look at this field, the plan is phased reactivation, re-enter existing wells. We've been out to the site and identified a number of the wells, or new wells. We'll be looking to apply modern technology and begin early production within the initial license phase. As we look at how we could commercialise this, well, to the north of us, about 30 to 40 kilometres away, is the Luanda refinery. That's been operational since 1958, and we have blacktop roads to get to the refinery. The refinery was expanded in 2022, has got the capacity to refine 60,000 barrels a day. So there's potential to be a source for some of the oil required in that refinery. So this part of the basin, the commercialisation of existing fields, we see this as a low risk, high return restart play. We'll look to leverage historical data and then near-term execution to quickly generate the cash flow. So the other area of the basin is what we're seeing as an underexplored working hydrocarbon basin. And this is not only Con 4, this is Con 15 and Con 19. So 15 and 19, you'll hopefully remember we announced last year and earlier this year, the non-operated ones with Akrep and Sonangol. Con 4 is the first operatorship that AFENTRA has achieved in Angola, and what we're looking at in the basin here, I mean, the Kwanza onshore, as you look up and down this basin, which covers about 25,000 square kilometres, it's proven, it's neglected from a perspective on data. The 2D data is very sparse, but you can see from the fields discovered and the wells that have drilled that there is a working petroleum system across both the pre-salt and the post-salt, and very limited modern exploration. I mean, effectively, no new wells, no new exploration wells have been drilled for over 45 years. So potentially there could be significant upside from both pre-salt and post-salt targets. So what technologies are we using? So we were one of the cornerstone investors in the EFTG. So this is technology, high resolution gravity that we have used elsewhere in East and West Africa. And that commenced acquisition last year. We have a regional grid that covers the whole of the Kwanza onshore. And at the moment, we'll be, or in the next few months, we'll be getting detailed maps, detailed acquisition across Con 15 and Con 4 to complete the survey. But at the moment, it can be used to evaluate the basin and also prospects. So we have a clear low-cost exploration plan in place. That will lead to define drill drop decisions within the initial phase. And said we've commenced already with the support of the EFTG survey. So when you consider this from a perspective of investment, this isn't greenfield wildcatting. It's targeted, data-driven exploration in a proven hydrocarbon system, which we view as low risk. In terms of a stakeholder strategy, this slide just briefly outlines the environmental considerations, the social impact, the regulatory compliance, and the security and safety. We've got extensive experience delivering high standards in complex onshore environments. What we have seen in Kwanza, as we've been up and down through the basin, is manageable across ESG, security, and regulatory fronts. And we're also addressing all key stakeholder areas proactively. From demining, there is a history of mines, so we need to be careful as we commence acquisition, safety planning, environmental oversight, and local community engagement. It's been done with structure, intent, backed by strong local partners, clear compliance framework, a track record of responsible onshore operations. And at that, I'll pass over to Paul to just summarise up the presentation.
Thanks, Ian. So as you can see, the onshore Kwanza, in addition to our other acreage offshore, provides really two strong avenues for value creation. The first, as Ian highlighted, is that field re-entry, redevelopment. A lot of progress in technology, if we think what's happened just in the last decade, or slightly more on the onshore US. So a lot of technology that can be applied to these fields that we consider maybe larger than currently viewed, and certainly we consider they were potentially abandoned prematurely. So that really provides a really early value creation opportunity. And then thinking over the short to medium term, there's the low-cost exploration play across all three blocks. And as Ian highlighted, regional analogues, suggest that there could be material volumes, particularly in the pre-salt, once we work our way through the FTG and start to think about further seismic. So we will now be getting on and starting to make progress. We are looking forward to Con4 being formally awarded later in this year. But in the meantime, as you can see, we're making good progress, not just in 15 and 19, but we're actually already making some progress in Con4. So with that, I'll hand it over for Q&A.
Perfect. Well, thank you very much for the presentation. Ladies and gentlemen, please do continue to submit your questions. You can do so just by using the Q&A tab situated on the top right-hand corner of your screen. But just while the company take a few moments to review the questions that have been submitted today, I'd like to remind you that the recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboards. As you can see, we have received questions throughout today's presentation. And Ben, at this point, I'll hand over to you to chair the Q&A, and I'll pick up from you at the end.
Thank you very much. I'm going to deal with the questions on Con4 first, because we've also had some questions on a general and strategic basis. So the first question is, what level of royalties are you targeting with AMPG?
I think at the moment you'll see in the pack we haven't really defined the detailed terms of the license that we have initialed. I think that's very appropriate, given it's still got a formal review and approval process to go through at the ministry. What we can say is we find the terms that we've negotiated today very attractive, and we will, as always, be able to share those terms at the right time.
Thanks, Paul. And that is the same answer for another question, which is information on the cost of the Con4 license.
Well, probably what we can say on that one is just that onshore operations are much cheaper than offshore operations, simpler to perform. So we can't give out details of the full cost structure, but it is, as we view it, a relatively low cost opportunity.
Okay, thanks, Ian. I've got a couple of technical questions. What's the timeline for reactivating Kwanza? Is first oil achievable in 2026?
I think 2026 is maybe a bit optimistic. First we have to go in, survey the wells, and then once we've assembled all the data, then we'll establish how quickly we can get in. But we'll be proceeding in the quickest, safest manner, establishing when we can get in.
Okay. There's a question regarding the aquifer at Tobias, and the question saying, might you have a similar challenge with reactivation on Con4?
Yeah, so Tobias, if I take that one, Tobias is a carbonate reservoir, fractured carbonate reservoir, which was obviously depleted. Kwanza North, in the north of Con4, is quite different. It's tertiary age, so versus Cretaceous. It's not carbonate, it's clastics, and the reservoirs are quite different. I mean, from an aquifer perspective, we know that Kwanza North did have water injection. The water injection, given the connectivity of the reservoirs, they're quite thin, was it worked in places. It didn't work in all of the places in the field. So it's quite a different structure, Kwanza North to Tobias.
Okay, got a question here about how many wells might you re-enter and what sort of IP per well might you expect?
Probably just say about the wells. I mean, the commitment at the moment is to do a couple of re-entries. That's part of the potentially the initial phase. We need to get in and assess the wells. These are wells that were drilled in the 1960s, late 1960s to 70s. So we're not sure how all of those have been left. Once we've been into a couple of those, we can decide if re-entering more is the right thing to do, or to drill new wells and bring a rig in to drill those wells.
Great. I think you just answered part of this question about how many existing wells can be reused in percentage terms. And then there's a follow-on which is, are the well sites still in place and the oil treatment facilities as well?
Mix is the answer on that. The tank farm was left, so there is oil tanks still there. There's actually a working gas well that still produces. Most of the wells, though, were temporarily abandoned. So there are some of them above ground, others still in their cellar. So we'd have to go back in and check how we'd re-enter them.
Got a question on rigs. Will one or more drilling rigs be moved from Cabinda or Gabon to the Kwanza?
I think we have to look at the opportunities. Will it be actually rig driven, or could it be just light sort of intervention opportunities? Again, it comes back to let's understand the opportunity first, and then we can decide what's the most appropriate way to move forward.
I think maybe adding to that, as Ian said earlier, the thing we like about this is the onshore nature of it, which means, as Ian highlighted, costs are low, but also access to equipment is high. There are already rigs available within the country. So again, we don't have the challenges of either high cost inflation or access to equipment that has been a recent challenge out in some of the deeper offshore areas.
I think the other bit on this one is also sharing of opportunity, or rigs of opportunity. So other companies will be potentially moving forward on drilling activities elsewhere. The same on seismic acquisition. I think there was a question earlier about CON 16. People will be acquiring seismic up and down this basin. That by one team coming in, we can acquire it across many blocks, and the same really applies with rig sharing potentially.
Okay, great. A question here: what were the production rates on CON 4 at the time that the wells were shut in?
At the end in '98, it was producing about 1,000 barrels a day across the facility. If you think back to '98, oil price was down at about $8-9 a barrel. Really didn't make sense for them to continue with this. Meanwhile, also in the offshore, you had hundreds of thousands of barrels a day with Block 2, Block 3 and Block 0 producing. So it was part of the reason it was shut in was it just wasn't material for those bigger companies back then.
Okay, and I guess a sort of follow on is what's the production potential in the next few years?
That's a good question. It all depends on, let's say if we get depleted reservoirs, it could be in the hundreds to a few thousands, depending on where you are in the field. If you could get virgin pressure, then we could be getting quite a lot more than that. It all depends on the type of opportunity in the reservoirs that we find.
Okay. Question on the significance of being awarded the operatorship. Do you think this will allow you to progress CON 4 quicker, given that you're operating?
Yeah, as people will have noted, we chose not to operate CON 15 and CON 19. We see them very much as exploration licenses, and our role in those two blocks, I think we're better placed to bring our exploration technical capabilities and support, in one case a CREP and the other Senegal, as they operate over the medium term. In CON 4, because of not only the exploration but this development potential, we did see it as an advantage for us to take operatorship and really drive the agenda and the pace on CON 4. So that we believe if there is potential there, as Ian's highlighted, that we can move forward commercially, then we're best placed to do that ourselves as operator with the full support of the partnership.
Got a question on infrastructure here. I mean, in terms of once in production, will it require building of a pipeline to Luanda, or are there better options for later production?
Yeah, I think the I mean, from the infrastructure in place, if you look at it from the type of road network that we've got, you could be able to get a trucking operation going very quickly. We've trucked in certainly a lot less hospitable places than here in Angola. So when we first went down into Kwanza, what we were looking at was the quality of the blacktop roads. They're good, and also the bridges across the Kwanza River and others. What weight of trucks can they take? So we already established that you could get trucking operating. There's multiple access or exit routes through to the Luanda refinery. Obviously, you've got to make sure that you're driving safely, since there is you will be driving through some populated areas. So that for a smaller type activity set, let's say several thousand barrels a day, you could be trucking. I think if you could get into the above 10, then you're going to have to look at maybe a slightly higher or a slightly more complex evacuation, maybe a truck to a tank farm, and then a boat round to, or barge round to Luanda to offtake. So there's, and again, the population density is quite low, so you could design that. But I think the nice thing is that the infrastructure gives you the ability to move quite quickly if we have success.
Had a couple of questions asking who the remaining 65% interest in Con4 is being awarded to. So I just asked you to reiterate your earlier answer.
Yeah, I think obviously we know who the other partners are. We don't think it's appropriate for us to be announcing that at this time. If they choose to announce it, that will be their choice. But certainly when the license is ultimately awarded, as with all the other licenses, the full partnership will be publicised.
Okay, and associated question: what's the rough timeline on the Con4 license award?
I mean, certainly we will expect it to be awarded this year, and we certainly hope maybe that we get it awarded sometime in the third quarter. But we'll see. I mean, it just depends on the time it takes for the process to go. There's a very clear process that this has to follow, and really it just depends on how long it takes to follow that process. But we'll certainly be trying to push it for third quarter. But I think, as Ian said, and I mentioned earlier, it's not like we're sitting doing nothing. We're already looking at some low density, I guess, FTG. We're thinking about what is the work programme, so this is not wasted or lost time between now and then.
Thanks, Paul. A couple of questions about wider Angola. Question here about thoughts on partnering with Corcel for Con16, the other UK listed E&P with exposure in Angola.
Yeah, we know the team at Corcel very well and have to congratulate them. They've done a great job of building up the company and announced recently their venture with Santana, which I think is a great step forward. I think there's plenty of space in the onshore Kwanza for many companies. So we do collaborate. I think Ian mentioned, the fact that we know the team there. At some point, we'll hopefully be collaborating over acquiring seismic, maybe even collaborating over drilling wells at some point in the future. And more broadly, we continue to review, as we work the data, we continue to review other areas in the onshore Kwanza and the attractiveness of them and the potential maybe to continue to expand their footprint.
Question here from James saying, are there any issues or opportunities from the collapse of the NAMCOR deal with Sonangol regarding blocks 23, 1506 and 27? Yeah,
we are as aware as anyone else is of the NAMCOR, the original deal. That was a deal that was announced at the same time as we announced our original block 305 and 305A deal back in, I guess, 21 or thereabouts, 22. So we are aware that that's not progressing. I think what we can say is, we know Sonangol very well, they know us well, and they know our aspiration to continue to grow. So I think if opportunities do become available, I would like to think that we'll certainly be be a consideration for Senegal. I think particularly given the good working relationship and partnership we have with them on Block 305 and 5A.
Great. Question on local content in Angola. Are there any restrictions on working with expats and specialists from abroad? Is there a requirement to work with locals?
I mean, Ian has probably even more. I'll just say a few words. I think what you find in Angola is the majority of the expertise you require is already there within Angola for the sorts of operations we're looking at on the onshore, etc. Where you do need specialists, whether it's people or equipment, and you're bringing that to the country, I'm not aware of any particular restrictions. And I think Angola is a very mature hydrocarbon province, understands, one, the importance and of developing local skills and capacity and capability, and they've done a great job of that. But they also are very cognizant of the fact that there's certain skills that they might need to import for specialist jobs. So far, we haven't come up against any issues in the work we're doing in 305 and 305A along with Senegal.
Yeah, I'll just say, I mean, that they've got a very long history of exploration, development, production, and people with extensive experience. So there is good local capacity. There will be some areas that the technology isn't available in country, which you can resource. So, for instance, a good example of that is Metatech came in with their EFTG. They're the only countries, I think, that could probably deploy that within country is probably the US because of the skill. Metatech came in and acquired the FTG. They partnered with a local company as well. There's some of the technology transfer with AMPG and also Senegal.
I mean, maybe so. Just add one other point there. It makes me think what you mentioned is that FTG, as far as I understand, the FTG processing, interpretation, and analysis is quite a specialist area. And so that would be somewhere even we as AFENTRA, we have knowledge and capability within AFENTRA, but we know of people that have worked with us in the past who have real deep skills in interpreting and analysing that data. And so that would be sort of people we would involve in the operation temporarily, and they would be working with our operators in 15 and 19, which again, as Ian said, is really great way to bring new ideas, new technologies, and new skills to within Angola.
Great. I'm not sure if you're able to answer this yet. It's on pricing. What's the discount to international crude you expect at the Luanda refinery?
I think we don't expect any discount to international is the straight answer, and maybe people aren't aware, but we lift cargoes from Block 305. Some of those cargoes over the last couple of years have been sold to the refinery, and you're aware that the oil we sell in Block 305 has a premium to Brent, and we get similar levels of premium at the refinery as we would do in the international market. So that's why it's a great place to be in terms of local, because if we start producing crude onshore, we have a market there up at the refinery where we can get international pricing.
Yeah, the refinery originally was built for Kwanza crude. So it was obviously expanded for when the oil fields were discovered in the offshore, but originally it was spec'd for Kwanza crude.
Great. Got some general sort of strategy questions now. Will you still pursue inorganic growth through acquisitions?
Yes, and you've seen that. I guess I've lost which day of the week it was last week, but I think it was last Thursday. We announced the signing of an SPA with Etu, our partner on 305. So I think a great example of our continued inorganic growth and really seeking out accretive deals that make sense to us. So I think that's a good example where we continue to look at deals of that scale and deals that are significantly larger than that.
Okay, brilliant. Got a question here about what's the current thinking with regards to buybacks?
Yeah, this is a matter we discussed kind of at length with various stakeholders and investors, and what you would have seen in our last results note or RNS, that we plan to go and acquire shares. Our employee benefit trust is going to require a number of shares over the next year for various awards. So rather than issue new shares and have dilution, we will be going into the market over the second half of the year and acquiring. I think we're looking at around about 6 million shares is what we announced. So that continues to be a plan. I'd point out we haven't started that program yet. We expect to execute the program in the second half of the year.
Great. And a question on hedging. Given recent geopolitical developments and oil price movements, has the company decided to hedge future H2 25 and H1 26 lifts at current pricing?
So I think, again, in our last presentation, the current investor presentation, you can see the program of hedging that we have in place for 2025, including the second half of 25. So we, in terms of our policy, we're fully hedged for the second half of 25 with floors of predominantly 65, some with 60, but predominantly 65, and a few percent, about 30-40%, with collars of around $80, $84. So we're very well positioned and have been throughout 25. We have initiated our program for 2026, but over the last, I'm going to say maybe 2 months, we've actually paused our hedge program given the volatility in the market and how that is impacting pricing in the hedging market. We don't see particularly good value at the moment due to that volatility in the hedging market, and it's something we keep under constant review. Actually, we have a review in the coming days to see whether we pick up our program again, but it's something we watch. So our intent would be to restart our 2026 hedging program and continue to put in place hedging to give us some surety on floor levels.
Great. So there's no more questions. There is a statement from James, which I'll just read out to end on, which is: the team is doing a great job. Thanks on behalf of all of us shareholders. So with that, I'll hand back to you, Paul, just for any closing comments.
Yeah, thanks again for taking the time. We've been keen to show this presentation for a little while, but we thought it was appropriate to wait until we had initial Con 4, and so that we could show you what we see as the full potential of the Kwanza Basin, not just the exploration potential. So thanks for taking the time to listen to that. It's been a good week for us with the E2 announcement last week and the Con 4 announcement this week, and we will continue to pursue value opportunities to kind of drive value for our shareholders and all of our other stakeholders. So thanks again for taking the time.
That's great. Well, thank you for updating investors today. Could I please ask investors not to close the session, as you now be automatically redirected to provide your feedback, and the management team can better understand your views and expectations. On behalf of the management team of AFENTRA PLC, we'd like to thank you for attending today's presentation, and good afternoon to you all.